Shaun White didn't win a medal in the halfpipe, but he gets the gold from me because that is one fine-looking ginger. Investor Beat starts now. Thanks for watching. I'm Alison Southwick. The market is catching its breath today after yesterday's 200-plus point sprint, which was set off by Janet Yellen's starter pistol. Today, the Dow is down a bit, while the NASDAQ is aiming a little higher. Joining me in studio is Bill Barker and Bryan White. So it's earnings season. Let's just get right into today's movers and shakers. TripAdvisor is up after the company announced that fourth quarter earnings met expectations. Revenue jumped 26% on strong display advertising. However, sales and marketing costs took a bite out of the profit. Bryan, I love TripAdvisor as a traveler. As an investor,
Not so much.
I don't know.
You don't know? Okay.
I don't know.
So I think what you stated there is important to understand as an investor. This is an advertising business, so the fact that as a user you like the service, that's what increases the value as an investor. Right? So for the most recent quarter, their monthly unique visitors were up 60% to 260 million. So you're not the only one that likes the site, and advertisers are attracted to that. You know, when 260 million people, unique visitors a month, you're able to sell advertising, you're able to do it profitably. Their operating margins right now are around 30%, and the true earnings power of that business, as you talked about, their sales and marketing was up. So they're still investing in the business. The true earnings power, their operating margins are probably in the 40% range, you know, if they pulled back their spending. But they continue to invest in the business to grow their audience. 260 million unique visitors is a massive number. Yeah. So as a user, as an investor, the fact that you're attracted as a user is part of the reason why you would be attracted as an investor, because it's an advertising business.
Cardboard King Packaging Corporation of America is up 8% after reporting Q4 numbers. The company beat on the top and bottom lines, and earnings were up big too. Cardboard boxes, Bill, not to bring everything back to Amazon like some people do, but seriously, like online shopping, is that?
I know, you think cardboard boxes are not interesting, but if you go back to the chart that just showed how much this company is up, in asset management, we have 3 funds. The stock, which is up the most over the last year, is another container board maker. This is an area where, yes, Amazon, many others are producing a lot of boxes. Pricing is very good. People are going to keep buying more and more things online. That is a big part of the growth. Not that this is a huge growth industry, but it's a place where you can get good valuations on companies, and they've got good growth prospects. And packaging containerboard is you know, something that people should be more aware of as investors.
I'm definitely aware of it in my recycling bin. There's a lot of Amazon boxes there. Caesarstone, a company that makes quartz countertops, among other things, is up today after announcing fourth quarter earnings. Strong gains were driven by the housing market rebound in the U.S. So, Bryan, if I wanted to invest in the housing rebound, do I look at the companies making the materials like Caesarstone, or do I look more at retailers like Lowe's or Home Depot? How do you invest looking at in a housing rebound situation?
Well, I think you could do both. The one interesting thing about the retailers, you're pretty much stuck with the 2, the Home Depot and the Lowe's. They're probably not going to be the most tremendous growth stories, but they also probably have the better competitive advantages than your material makers. Material makers for the home tend to be a relatively low margin business, highly competitive, tough business, but I mean, you find the right company, you can do well. And I think the longer term story within the housing thing is not necessarily the rebound today, but the potential remodeling story in the future is as these homeowners that have locked in low rates, if you go forward 1 year, 2 year, 3 year, higher interest rates, probably a reluctancy to give up that 30-year fixed at a low rate. So maybe you'd lean more towards remodeling than going out and buying another home if you wanted a bigger kitchen or XYZ.
Dialysis provider DaVita Healthcare Partners is up today after beating fourth quarter expectation. They also issued upbeat forward guidance. So, Bill, for-profit dialysis chains like DaVita, they had a rough go last year because of concerns over Medicare and payment, which is where they make most of their money. Now that they've lobbied their way out of it, what do you think of the industry?
Well, you know, you don't necessarily want to see that there's that much more dialysis going on, that, you know, standing outside of the investor's perspective, that's not a great thing. But they're making use of it. And, you know, as long as the reparations, both from the government and from the other aspects of the insurance industry, are working, there is a little bit more certainty into how everybody is going to get paid under the new healthcare laws. That's going to shake out for a while. I think you're going to see some more hiccups. This is not going to be completely smooth sailing, but the sort of end of the world scenarios that a lot of people were afraid of from any number of perspectives from the new healthcare law are not going to be as big a problem for anybody in the industry as I think the greatest fears were. And you know, you're seeing it at an all-time high today, and I think business looks good from here.
All right, that's going to do it for today. Let's take a look ahead. What is one stock on your radar, Ryan?
Zillow reports after hours today. The expectations are high for this company. If you're an investor, the one number I'd want to look at is the number of new subs, real estate agents they sign up during the quarter. They've done amazing the past 2 quarters, so the expectations are high, and we'll see what they do.
All right, how about you, Bill?
Looking at J.M. Smucker, this is known for the Smucker's jams and jellies, which are being advertised a lot on the Olympics, which you referenced earlier. They also have peanut butter, and mostly, though, they're a coffee maker. They have Folgers brand. What is going to be interesting from their report, which comes out Friday, is whether the Folgers brand has been able to improve any of its K-Cup sales, which is what really hurt the company on its last quarterly report. This is where the growth in coffee sales is coming, almost exclusively from K-Cups. If they can't participate in that growth, you'll see the stock take another hit.
All right, well, that is going to do it for today. We potentially have a big snowstorm coming tomorrow, so we do hope to see you tomorrow. But if not, you know, we're digging out of our houses. For Bill Barker and Bryan White, I'm Alison Southwick. Thanks for watching.